Good afternoon and welcome to the MEDIAZEST PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Jeff Robertson, CEO. Good afternoon, sir.
Good afternoon, Alessandro. Thank you very much, and thank you everybody for joining us today. As Alessandro said, my name is Jeff Robertson. I'm the CEO of MEDIAZEST PLC, and I'm just going to give a short presentation on our final results for the year ended the 30th of September 2022, and give a bit more detail about what the company does for those of you who might not be too familiar with our work. As Alessandro said, I'm the Chief Executive Officer, and I'll be presenting today. On the board is also Lance O'Neill, who's our non-exec chairman, and James Abdul is our independent non-exec director. I think probably the easiest way to understand what MEDIAZEST does is to see it. So we're going to start with a short 30-second video just with some of our work and some of our recent projects. So Alessandro, if you could play that, please. Thanks, Alessandro. So yeah, lots of varied and exciting work, and I'm going to talk a little bit today about how we deliver our projects, what we do, and how we come up with those solutions. So first and foremost, why MEDIAZEST, why now? So 2022, financial year 22 was a great year for us. We saw 26% revenue growth year on year, and an EBITDA profit, our record EBITDA profit of £220,000, which is a big 184% increase from the prior year. The operating subsidiary, which is MEDIAZEST International Limited, recorded an EBITDA of nearly £500,000, so really pleasing result. We have multiple long-term blue chip clients we're working with, obviously showing a strong recovery now post-COVID. All of the markets and all the key sectors in which we operate are expanding rapidly, and I'm going to talk a little bit more about that. And we saw a swing to profit after tax at group PLC level after a loss the prior year when we were impacted heavily by COVID. What about the business proposition? So what do? We deliver turnkey audiovisual solutions to our clients, and we generate revenue from project fees, which include the installation of hardware and software on our customer sites, but also we generate ongoing recurring revenue streams from service and maintenance contracts that's supporting those solutions, and also including content hosting and content management for our clients. We work in three key sectors, so retail, automotive, and corporate offices. For retail, we're seeing real evolution of retail, focusing really on customer experience now with technology as the enabler. That's been going on for several years, really supercharged post-COVID. Automotive, we're seeing new dealership business models, both with dealer groups and with manufacturers, and also seeing lots of innovation in that sector around electric vehicles, and that's really driving the use of technology. In corporate offices, again, this is a trend that was happening before, but we're seeing a real acceleration of it post-COVID, is hybrid working. So people taking reduced space and having reduced occupancy levels, and that needs more technology to manage that resource more efficiently, but also to manage when people are in the office and maybe they want to collaborate with someone who's at home or in a completely different part of the world. Our strategy really has sort of four pillars. So firstly, it's an ongoing strategy to improve performance visibility and the value of the business by focusing on long-term contractual revenues and clients that generate repeat business. We focus on clients with long-term opportunities to deploy solutions across multiple sites, whether that's retail stores, car dealerships, or offices. We've got a very diversified client base in different sectors, even within each market. So even within the retail sector, there's lots of diverse clients in different areas, which helps reduce risk, of course. The common thread for us is innovation in audiovisual. And the fourth pillar, and this is a really growing one for us, is collecting data from our installations and using that to provide actionable insight to our clients. So we do this by using discovery technologies such as cameras, sensors, touchscreens from the sort of Internet of Things and big space arena, and we add those to our core systems. So what we're saying to our clients is we won't just design a solution and provide that for you and look after it, but we'll also give you information and data on how it's working, where it's doing well, if it's delivering what you want, and how you can improve it. So really adding that value and also demonstrating long-term return on investment for our customers. Layering on top of that strategy, excuse me, what we're seeing recently in the last 12 months has been an increase in work outside of the UK, and particularly in the EU. We've been in Spain, the Netherlands, France, Germany, and Slovakia all in the last 12 months, and the United States as well. Beyond that, we've worked for many years globally for some of our clients, but we're really seeing an increase in appetite there. Because of the increase in the EU appetite and post-Brexit, to make it easier to deliver our projects, we've established a Dutch subsidiary, and that went live in December 22. So we're expecting to see the ability to deliver more projects and deliver them more efficiently for our clients in the coming years. I think I'm really excited about that proposition. So I mentioned the three markets: retail, automotive, corporate offices. I think another good way to understand what we do is to sort of take you through just some quick case studies in each of those. So starting with retail, this is Lululemon. They've been a client for nearly 10 years now. We work with them across the UK, but also across Europe. We deliver audio-visual solutions for their stores. This one is a flagship store in the Champs-Elysees, which opened in December 22. There's LED in there behind the cash desk. There are screens around the shop itself, talking about their ambassadors, talking about their offers, and also some innovation stuff. So we've got a transparent LED going in there as well. So a real mix of technologies we're delivering for them across Europe, ongoing support and ongoing content help as well. Another good example, Pets at Home, we've worked with for nearly 5 years now. We do digital signage for them across their stores. We've done about 70 so far, and that can be quite varied. So it's got different use cases in the store. So it could be at the cash desk where people are waiting to keep them entertained, talk about offers, to talk about their brand. It can be at the front of house as you walk in. There's an interactive screen, and that's got some nice things like selfies or games. It's really great for engaging children when they're coming in, maybe looking at the animals, so bringing through that next generation. And also, we've recently started working in the vet surgeries for them as well. So reception screens, waiting screens in the dog and the cat areas. So, we can keep people informed of offers. They can get their messaging across. In the retail market in general, we hear lots of talk about the retail and the death of retail and death of bricks and mortar. I think that's been going on for 20 years. We've had those stories. What we're really seeing is actually a focus change to fewer, better stores. So that the high street is evolving, but it's talking about now fully integrating the online and offline platform to provide a seamless customer experience. So that's more important than ever post-COVID. So your website has to reflect your store, your bricks and mortar, and vice versa. You want one experience, and it's look and feel the same to your customers, however they choose to interact with you. I think one of the things that came out of the pandemic was certainly some of the increase in digital, and really made the case for why digital is so important, able to get messaging out quickly to customers. So whether that's in a shop window saying we're closed today, we've not got enough staff, please go to your nearest store, it's here, or it's talking about the measures you're taking to protect people, or it's facilities such as click and collect, which are growing enormously in terms of convenience for customers. All of that is being enabled by digital technology, the digital signage that we provide. They've recently opened Battersea Power Station. If some of you may live down that part of the world, a huge retail space, some beautiful stores. It looks stunning. Huge investment going in there. And finally, just another point on the retail market. What we're still seeing as well is what was originally pure play online retailers moving into bricks and mortar. Amazon Fresh came over a few years ago and started doing that in the UK. We work with them, not on the Amazon Fresh brand, but on their Whole Food stores. If the quintessential online retail like Amazon is opening bricks and mortar, then it's not going away anytime soon. So the death of the high street is greatly exaggerated. What we are seeing is the evolution of the high street, and it's evolving in our direction. They're putting more and more technology in. So the second market we work heavily in is automotive. A really interesting market at the minute. Lots of change going on. Electric vehicles coming through. that provides a real use case and a need for technology. So in two ways, really. One is that is reflecting the technology in the cars, reflecting the brand for these manufacturers, but also enabling you to understand exactly how the electric vehicle proposition works. So lots of frequently asked questions, such as, how far does it go? How do I charge it? What's the cost implications? This dealership is Blue Water for Hyundai. We put this in late 2014. We recently refreshed it last year as to make it electric vehicle focused, with some additional technologies and refreshing some of the technology. Really interesting model. This is in a shopping centre. So rather than try and get people to the out of town dealerships, they've put a location in where there's lots of footfall, lots of traffic, lots of people can browse. So again, that's what we're seeing is the real evolution of those models, where rather than get you into a big out of town car showroom, and then lots of salespeople trying to sell you stuff, much more about browsing, putting the customer in control, continuing that online journey where they're doing most of their research, but then they really want to come in and physically interact with the car, get in it, feel it, touch it, see how it looks, and that's where bricks and mortar really delivers. Also in the automotive sector, we're not just seeing innovation on the manufacturer side, but also from the dealer groups, where they want to use technology to improve their showroom, to put the customer back in control again. This is Carverse, where they're using interactive touchscreens for their used car journey. Really interesting. It doesn't look like a car showroom. Interesting. There's not even a picture of a car in that. It's very open. It's very much about collaboration, very much about working with the customer to give them what they want, and using technology to help them to do that. The third sector we work heavily in, I mentioned, is corporate offices. That's been, taking new technologies on for many years now. Certainly, sort of Zoom rooms, Teams rooms. That's all been coming through the sort of last 4 or 5 years, and post-COVID, as I've said, that's massively accelerated, as we can all see. Lots of people not in the office all week, or in the office part of the week, or it changes week to week. So we need meeting room technologies with video conferencing, so we can have collaborative meetings, people in the room, people joining from wherever they are. We're seeing more and more impact of the reception area, so using digital to make that really stand out, to really talk about a brand as soon as someone walks in, and also room management and presentation systems. So being able to manage how it works in the room, so someone can come in, press a button and get started quickly without having to sort of figure out what to do and spend waste time trying to make the systems work. So simplifying, making the systems really easy to use, absolutely something we're doing more and more. In the corporate space, there are several different angles and opportunities that's growing. As I said, post-COVID, that hybrid working model is really reducing footprint. That means fewer meeting rooms that need managing, so meeting room booking systems. It means being able to deploy bring your own meeting, where you come in with your own laptop, plug it in, and away you go. Whether that's Zoom rooms or Teams rooms. Town hall presentation areas, that's another interesting area for us. So that's where a lot of companies take the opportunity to address their staff. And again, I would argue the last sort of 3 or 4 years, that's become more important than ever, with so much change going on and uncertainty. What we're seeing now is everyone's not in the office. So rather than get everyone to stand downstairs and the CEO talks, people are offline, people need to see it at a later date, so you need to record it. People you need to stream remotely. So AV systems to enable that as a real growing area for us. I've mentioned already, excuse me, high impact reception displays. I don't think you walk into any major business these days without expecting to see some sort of technology telling you about that business and what they're doing, and how they're doing it. And the final area that we're seeing quite a bit of growth and a lot of niche opportunity for us is a product called Barcode ClickShare we work with. That's all about wirelessly transmitting from your laptop to a screen. So the idea is, you get rid of all the cables and no one knows where they go and people pull them out. It makes it easier to use, and again, a more consistent experience when you walk into a room. The really nice thing about that, and it ties in one of the pillars we talked about earlier, is bringing the data about the room usage for that. So how often has it been used? What technologies are used? And that can be fed into the next generation of next upgrade to the meeting rooms. The office managers can look at it and go, okay, we haven't got enough rooms that do X, Y, Z, or we've got too much capacity here. How can we refine that and make it more appropriate for the staff and how they're working now? So you're really moving a lot quicker in these turnarounds of rooms and structure for businesses. So really important technology for them. I mentioned earlier I was going to talk about market size and opportunities to grow. I think that's very much key to the question, why now? We believe there's a significant opportunity now to build a leading digital signage business with international reach, and arguably we're well on our way to doing that. Digital signage, we've been talking about it for 15 plus years, but the market has really taken off the last 5 and the last sort of 2 to 3. It's really exploded. If you walk down any high street, walk into any sort of major shopping center, you'll see technology everywhere now, digital signage technology. In terms of the global market, so the AV market, totally the professional AV market, so that would include all those sectors and some others, that's believed to increase by over 113,000 billion dollars over the next 5 years, with a compound average growth rate of just under 8% between 2022 and 27. Within that, the global digital signage market itself is forecast to grow by just over $8 billion over the next 5 years, CAGR of just over 9% between 2022 and 27. So huge growth expected in this market, and that's what we can all see coming through. The other opportunity we have is there are many relatively small skilled companies in the market, but without sufficient access to capital or scale to meet this coming demand. And that gives us real opportunity at MEDIAZEST to use our public listing to become a consolidator in the market. So the results for the 12 months, so obviously the accounts went out recently, just to sort of look at some headline figures there and talk a little bit behind them. On the profit and loss side, as we said, really pleased to see revenue grow back post-COVID. We grew 26%. The gross profit actually grew 39% as a result of margins improving. So great to see the top line revenue growth, but still maintaining, in fact, improving the margin. It was really pleasing to see. EBITDA up 184%. So big swing from 78,000 profit to 220,000 profit, and a swing to profit after tax, as we mentioned. On the balance sheet, year on year is pretty consistent. I think the one area that stands out is the trade debtors, trade receivables is slightly higher than last year, and the cash slightly lower, and that's because there was a large contract invoice that was paid shortly after year end, so just missed the cutoff. So thinking behind the numbers, our largest 20 clients by revenue account for around 80 to 90% of our turnover in the last 2 accounting periods, and 16 of this group appear in both FY22 and FY21. So really consistent group of clients that we work with on a long-term basis. That leads to regular repeated work on projects, and often that's on a store-by-store or a dealership-by-dealership basis, rather than large one-off deals. So what we might get is a rollout of stores, but one at a time, maybe 3 or 4 a quarter, and they could vary from sort of £2,000-3,000 up to sort of 20, 30, maybe even more. That makes it difficult to put big blockbuster announcements out of these rollouts, but the great news is that underlying the business, there's consistent work coming through. Even if it's not contractual, it just comes through on a regular basis. To capture that and to talk about that, that's why we do trading statements, sort of trading updates every quarter or so, as well as the half-year accounts and the full-year accounts. It'd be great to have one big purchase order and a nice big deal to announce, but that's not really how the market works. And finally, on that point, the recurring revenue contracts, since we last did a presentation like this, we've grown about 10%. So we're now in the region of about £600,000 annualized value. That's 21% of our total revenues. Some of those are multi-year deals, typically up to 3 years. Some are shorter term. I would say most are now moving to longer term. That's great for us because it means we can guarantee that income, and we've got better visibility of income, but also great for our customers because they know they've got the support for the solution, so it lasts and they get the ROI out of it. So finally, just a sort of summary and the outlook. We're an award-winning audiovisual technology partner of choice for a lot of top global brands. We've got several large long-term clients with large growth potential, and some are already on rollout projects with us that are in progress. What we're really seeing is the maturing market in digital signage, and that's opening up opportunities to consolidate the market as well as grow organically. We believe we're very well positioned in each of our 3 key markets to grow as well. In retail, where we're focusing on fewer, better stores and an enhanced digital experience. For automotive, where we're transitioning more to electric vehicles, but also to digital models. And the corporate market, where we're seeing the accelerated trend for a smaller office footprint, saving costs, and using technology to help manage that and improve staff retention and collaboration. Just as an appendix, and this is all available either in the accounts or on the website, www.mediazest.com, under the AIM26 section of the website in Investor Relations. So directors and other significant shareholdings, and also shareholder loans and convertible loan notes are there and all detailed in the accounts. There is also a link to the accounts on the website should you need it. So finally, I just want to say thank you very much for your time. Thank you for listening. We think it's a really exciting time for the business. We're seeing lots of growth in all of our markets, and all the hard work we've been putting in over many years starting to come to fruition now. We think it's going to be an exciting year, and I look forward to your questions. Alessandro, back to you.
Jeff, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while Jeff takes a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Jeff, as you can see, we've received a number of questions throughout today's presentation, and if I could just ask you to read out those questions and give responses where it is appropriate to do so, I'll pick up from you at the end.
Sure. Thanks, Alessandro. So yeah, looking through the questions. So for Mark A, how much of your revenue is now recurring and how is that revenue split? So that's round about 21%. So about 80% is project based. As I said, within that project, there are quite a few clients that are providing ongoing business for us. So it may not be a contractual recurring revenue, but it is, ongoing time and time again. Steve K, what market trends are you seeing and how can you capitalize on them? Who are you pitching against? Market trends, I think very much, as we said in those different areas, the retail, we're really seeing much more digital go in, really trying to tie that online, offline experience together, get that consistency as a brand. Automotive, we're really seeing lots more technology in store. Again, how they present themselves as a brand, so important to the manufacturers. And on the corporate office, it's much more, I think, more of a practical, how do we make these spaces fit for purpose? Now we've got a smaller space and people are coming in and out of them and not everyone's in the office. So those are the three sort of big trends in the markets that we're working in. In terms of pitching against, it depends. So in the retail market, we're pitching against other sort of relatively small but highly skilled companies like us, I would say. Automotive, again, the same. I think digital signage, it's a tricky concept, I think, for a lot of our clients. It cuts across lots of disciplines, whether that's IT, store design, marketing, finance, so bringing it all together and delivering that on an ongoing basis is difficult. So there's not many people can do it, which is great for us. In the office space, that's a more traditional established market. There's a lot more competition on that. And that's one of the reasons why we still see a lot of work in that market, but we don't focus on it. We really focus on retail and automotive where we think we're strongest. In terms of who we're pitching against, so in the corporate office there'll be lots of AV companies, some considerably bigger than us. For us, it's really about niche technologies, looking after the client. A lot of clients, once they work with us, you've developed that trust, they're happy to continue in different facets. And like I say, pitching against sort of customers, companies quite similar to us in the retail and automotive. Next question. How do you define the increase in demand and what lead time do you have for customer projects? That's a really good question. In terms of the increase in demand, we see the market growth and the predictions from the sort of from the surveys that we talked about in one of the slides. I think from our side of it, it's very much what we see as well on the coal face. How often are customers coming back to us? Are we seeing new customers? Are we seeing increased demand for pitching? I think at the beginning of the year, it's fair to say, I think in lots of industries, everyone looking around and concerned what the market in general is going to be like. But what we've seen, encouragingly, is lots of pitching and lots of people asking about digital. I think that's because the technology's matured and people need it more than maybe in the past. So that even if they're wary about budgets, they're still looking ahead and understanding they need it. So that's where we see an increase in demand, just in terms of the amount of activity we've got on the sales side. What lead time do you have for customer projects? That's a really good question. It really varies. Sometimes it could be, if we're in a rollout project and we're just doing another store in that project or another dealership, it could be 2-3 weeks, maybe even maybe even quicker sometimes if something changes. For new projects, that can take a long time, and certainly in the lead time to build those rollout projects, these have taken many years to get to, because people typically will experiment with a few stores or a few dealerships or a couple of offices, check how the technology works, understand it, and then start to roll it out over time. So the lead time can be very long, difficult to forecast, and it really depends by customer. Next question, sorry. Please can you give an update to the establishment of the EU-based subsidiary, and how do you expect this to improve new business going forward? Yeah, absolutely. So the paperwork went in late last year, and that's all been concluded now. So we have the Dutch subsidiary set up as of, I think, the very end of December 22. We have several clients that we work with already in the EU, and sometimes they can be EU-based clients where they've come to us. So a good example would be Porsche. Porsche in Italy we work with in Milan, or UK clients who want us to deliver the same consistent, excellent experience for them over in Europe. So a good example would be Ted Baker or Lululemon, actually, that we looked at earlier. What this is going to help us to do is, rather than take the kit in here and then ship it out and then incur more fees and more costs to the end customer, which makes that obviously makes us uncompetitive then in that area. By having the subsidiary, we can buy locally, we can run all the accounts there, and we can deliver like that. I think it's also signaling to our customers that we're working with there that we are ready to gear up, and that I think opens up opportunities for us to write more business with them. And we have several, fairly large opportunities we're working on in the EU. We are pitching at this stage, so many a slip. But we have, we are encouraged by the amount of opportunities we're now seeing, and I think having an EU-based subsidiary, the attitude that we're seeing from our European counterparts that's a big tick in the box to taking us seriously, to working with us more in that territory. What are the barriers to entry to sectors you are not currently in? Is healthcare a key market? We do very little in healthcare, in all honesty. We'd love to do more. I think it is very specialist and very niche. A lot of it is the technology has to be used, has to have certain criteria, so it needs to meet special regulations on germ-free and touch screens that are self-cleaning, that sort of thing. We have done some stuff in the past in that area, and we do have one medical client where we're doing, actually it's digital signage, it's wayfinding, it's information, it's exactly what we do in the retail and the automotive market. It just happens to be in a hospital. So there are opportunities there. We don't really focus on that as a market, and there are some very niche players in there. And I don't think that's going to change. I think there are opportunities for us. We're very happy to take them, but I don't see it as a specialism for us. Barriers to entry sectors you are not currently in. Well, I guess touching on that, it's the specialized technologies and the reputation, and I guess the contacts that you develop in those markets over the years. So conversely, what we have in retail and what we have in automotive is, over many years we've been established in those markets, and we've talked to those key players. We have a great reputation, and that then makes it easier for us to win business. So even if people haven't worked with us, they may have heard of us or come across us, or they've worked with somebody who has worked with us. So that reputation is already there. So I would say the biggest barrier to entry to sectors we're not currently in is probably that longevity in it and those connections. There are other markets such as education, which are tied up in sort of consortium where you have to be a certain size to be on that, and we don't generally meet those criteria. We still do some work in those sectors, but that's definitely a barrier there to do more in that area. I'm just looking to see if there's other questions. Sorry, yes, one more. You state that you will make a revenue enhancing acquisition in 23. How will you fund this, and how fragmented is the market? Are buying customers or capability? We think, well, certainly we've said that we're looking at acquisitions, and we've been very open about that. We think there's a real opportunity because no one else that we see that we compete with on a regular basis has a listing. So therefore, there's an opportunity to fund it, to consolidate it. It's quite a fragmented market. It has been growing, digital signage, but it's taken a long time. In terms of funding, it would depend on the deal. In terms of buying customers or capability, I would say we would consider ourselves at the top end of our market. So I think it's not so much capability, but I think there are small companies there. We put a few together, you can get that economy of scale, and we could get customers, a wider range of customers. So I would say we probably look more in that area. But yeah, it depends on what the deal is and what company we're looking at. But we are, actively looking around in that area. We think it's a real opportunity.
Thank you very much for that, Jeff. I think you've actually managed to address all those questions from investors. And of course, the company will review all the questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to yourself and the company, Jeff, could I just ask you for a few closing comments?
Yeah, sure. Thanks, Alessandro. Well, thanks again, everyone, for their time, and thank you for the questions. I think there's some really interesting points there. We think it's a really interesting time in this market. We've been, doing this, as I said, for over 15 years, but it really feels like the last 2-3 years it started to come of age. To give an example, we used to go in and explain to people what digital signage is, and now we go in and we talk to them about what their digital signage goals are with our clients. And I think that really shows that, we've hit that tipping point. We think it's an exciting, year coming up. There's lots of great work and great clients we've been looking after for many years, and we hope to field more questions. If you've got more information you'd like, the website, as I said, is mediazest.com. Please feel free to contact us on that. There's an AIM 26 section under Investor Relations. If you've got questions, please come and talk to us.
Jeff, thanks once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of MEDIAZEST PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.